Okay, Chair, thank you.
We're on now, are we? Thank you. Good afternoon, everybody, and welcome to the Audit Committee meeting on this day, Wednesday, the 27th of September 2021. I've got to read this notice out. Bear with me. In accordance with the Openness of Local Bodies Regulations 2014, this meeting is being live streamed and may otherwise be recorded, filmed or communicated on any other media platform. The recording of this meeting will be made available on the Council's YouTube channel shortly after the meeting. Both councillors and officers in attendance are reminded to make full use of and to speak clearly into the microphones available. A reminder that mobile phones should be turned off or put on silent mode. Those present at the meeting should refrain from taking telephone calls. Thank you. Before I start, I've put into practice what we preach. Go to the agenda, papers. Item 1, which is apologies for absence, please.
Apologies from Councillor Sharon Morris and Pretty Joshy, Chair.
Thank you. Item 2, appointment of substitutes.
No substitutes, Chair.
Item 3, declarations of interest. Anybody got any declarations of interest? I need to take some advice from you with regards to one of the items that's being dealt with by Mark. It talks about the Community Safety Partnership, which I chair. So I'll probably have to register that I'm chair of that committee.
You can place it on the record, Chair, but I wouldn't necessarily say it would disbar you from taking part in that discussion.
Well, I just make sure I record it then. Thank you very much indeed. Item 4, we've got the minutes of the previous meeting. Read, confirm and sign the minutes of previous meetings in accordance with Rule 19 of Part 4 of the Constitution. Sign those minutes.
Happy to sign.
Okay, any action, a list arising from the previous meeting?
There is no action list from the previous meeting, Chair.
Thank you. Any petitions or deputations?
None received, Chair.
Thank you. Okay, now then, this is going to be an interesting one. External audit.
Always interesting.
Okay, update the report. The two appendices that you're going to talk to are Appendix 2, which is on page 165, and Appendix 3 on page 150. Is that
Correct, Chair.
okay? So,
Chair, could I introduce the report and then
pass it on to Grant. Yeah.
Can I ask what numbers? Mine, I got 2 numbers on it.
Appendix 2 is page 165. That's the one at the very bottom.
the annual audit letter?
All right. Appendix 3 is page 150. Again, the big number at the bottom, not the numbers on the right.
Okay.
Okay, thank you.
The purpose of this external audit report is to update members on the progress of the external audit of accounts 2020-21, and the council statement of accounts of 2021. The draft statements have now been produced, and the recommendations. A, the 2019-20 audited statement of accounts ended 2020 have been approved and published in the council's website, and that's going back to July's meeting. And item B, recommendation, an audited 2020-21 statement of accounts for the year ended March 2020. Will be reviewed and approves. And item C, approve the annual governance statement for the year ended the 31st of March 2021. That's the front sheet. And then just going to the main body of the report, I just Firstly, stating that we've produced the statement of accounts, unaudited ones, and then if you go to item 4, it talks about the statement of, it talks about the statement of accounts that in 1920 were published, and then in item 4.2 basically states about at this point I'm introducing Grant Thornton's annual audit letter, and if you look down, I've listed out 4 items that Grant will talk about. Is about other land and buildings revaluation. These are key items that we as a council need to look at. Finance function capacity, the collection fund, property, plant and equipment.
Sorry, something. You're reading from a particular paper. How does it relate to what's on here?
Oh, it's on it, 4.2.
4.6. What page numbers are you?
So it's on, so it's in external audit, it should be item 4.2.
Page?
Page 9. Page 9.
Page 9, sorry.
What we do is, at this point, I'll introduce the report, hand over to Grant Thornton. He's going to introduce 2 reports, which are going to be Appendix 2 and Appendix 3. And just to note that Appendix 1 is a copy of the annual statement of accounts. But if I hand you over to...
Okay, thanks. Yeah, I'll try and explain exactly what's going on here. From our perspective is, and I will take members through this. So you got 2 papers from us. One is related to effectively the final bit we need to do on 2019-20, which is the annual audit letter. And we'll speak to that in a moment. And that then alludes to what you've just heard from section 151 officer around those areas of, I suppose, that caught us out a little bit in 2019-20 and there were recommendations. And then effectively the second progress report then takes us into, as you've just heard, the 2021 financial statements have been published. So it's an update on where we are in that audit process. So that's what I'm going to take you through. So what if I go to the annual audit letter first, which closes down 2019-20, which is
the page number,
which is to page 165 on. Okay. Right at the end of the financial statements, after the annual governance statement.
That's the appendix, starts with Appendix 2.
Yeah, that's Appendix 2.
Okay, thank you.
So just for clarity, this is not related to the accounts that go before. It is related to the past year's accounts when we came to you in July in respect of finalising our audit of 1920. Now, a lot of the information in here, a lot of it you have already seen before. It's effectively drawn from our audit findings report that you received back in July. Whether you agree or not agree, it's meant to be trying to put it into more plain English because this is a document that goes onto the onto the council's website. It's effectively our sort of, in old speak, our management letter to you, but it's a letter sort of summarising the work we've done on 1920. But closing that year's down because we certified the audit closes here, I think on the 9th of August following the July audit committee. So in here, there shouldn't be anything particularly new. So just to remind the members about the materiality we set for the accounts, we did issue an unqualified opinion on 9th of August. We also issued an unqualified value for money conclusion on that date in relation to 2019-2020. And we did certify the audit closed. I'm not sure, I wasn't proposing to go through this in detail because I know we've seen a lot of the detail of this already. But I mean, I think what we can see from here, the key challenges, as I'm sure you're aware, were in respect of the delay in the audit, and that does pick up on the highlighted areas around the valuations of other land and buildings and those elements that are highlighted at 4.2 and where the audit focus had to be last year around the collection fund, other land and buildings and elements like that. So I wasn't proposing to go through that in terms of in detail. I mean, the key thing was it took a significant amount of time to resolve some of the audit matters as part of that audit. And we put in here the reasons why we had to do greater challenge and what the reasons that we had to I suppose, undertake additional testing. I don't necessarily want to, I'm happy to go through the reasons again, but I think we went through it in detail in July, so I wasn't proposing to go through it again. But just to say that we did complete a whole of government accounts, we're still below the threshold, and we did certify the audit closed. Just if looking at pages, I suppose 170 and 171, we're just talking about the COVID-19. We did look at the management controls and override control and journals. There were no issues that we needed to bring to your attention there. There was some issues around the valuation of the pension liability, but that was linked into the pension fund, nothing to do with the council. So as I say, the bigger challenges for us as part of the audit were the valuation of land and buildings, getting the evidence, and that will still flow into 2021. And going forward, in terms of that won't change our overall audit approach in relation to that. So I've also put in the value for money conclusion there, and then we did look at the council's financial sustainability for 1920, and clearly we've got through 2021. So to a certain extent, we were saying there that you were, financially sustainable for 2021, and we were revising that for 2021 into 21-22. We mentioned a change of governance arrangements for the audit committee, yourselves, and the fact that I suppose you were growing into the role, becoming more established around that and the challenge and the role of the audit committee. And we did look at the finance function as a result of the delays to the audit. We were satisfied, and I think we were challenged around whether that was sufficient in our view, that we'd need to look at where we qualify the conclusion. I think we were satisfied that given the overall context within which the accounts were prepared, the pandemic, changes in senior staffing, that it wasn't such a significant weakness that it would, at that point, conclude that we'd have to qualify the accounts. But we've made recommendations for improvement, and clearly that's what the council is putting in train now with increasing the people and recruiting to the various roles. So the biggest impact, unfortunately, as I'm sure members have noted, is on the audit fee and the extended time that the audit taken. And therefore, what we've done in I suppose, Appendix A is highlighted that in terms of the changes to the audit fee and the increase from the scale fee, which was already planned, but effectively in terms of the additional cost that was in relation both to COVID, which is not just an impact upon your council, that was a cost-out piece, whereas we ended up being about a 15% increase overall. But then there's a specific interest fee variation for the audit overrun. So that's on page 177 in detail. And then on page 14, we just really summarised the recommended action plan that was picked up as part of the audit findings report and management's responses to that. So really this brings it all together in a way to I suppose, to draw a line under 1920 before we kick 2021 off. But I'm happy to take questions.
Thank you. Any questions of Grant at all? David?
It just mentioned because I know we talked about it last time.
Yeah.
It's the significance of the valuations on land and buildings and the overrun into 2021. Is that going to be a significant impact into 2021, or is it? What's your?
Well, I think we've had conversations. It might be one for me to hand over to Commy section 151. A lot of that was actually around getting back to source data and plans of buildings effectively that the valuer then uses to drive the valuations. I think you were out to look at getting maybe a new valuer in or new elements like that to do that. So it will still be a significant risk, and I'll pick that up in the next paper for our audit, and therefore we will be asking for similar or if not the same information. So I think what we were looking for and what we worked with Commy and Finance team was said, well, that we're going to need that. You need to improve your arrangements for this year. So I'm hopeful that given time that has elapsed by the time we begin the audit in substance, which I'll come on to, is going to be around about that sort of end of October, November, probably by the time we get there, but that would have been resolved. So that's what we've been talking about. So I'm hopeful not, but I will say that not just yourselves, it does continue to be a challenge across the sector as a whole. So you're not alone in that. It's an area of focus. So I'm hoping it won't be as big a problem. Clearly, given the size of the council, the size of your asset base, generally we have a smaller sample to test, but it doesn't take away the complexity of that. And looking at the assumptions the value was used, even if you've got a smaller number of buildings, they're still complex valuations, depending on how it's done, how the valuer values whether it's depreciated replacement cost or whether it's based upon market value. There are some assumptions in there. So I think you've begun, I think you put things in progress and it shouldn't be a problem, but I can't until we actually start work and get the evidence in. I don't know at the moment, so we haven't started that.
Can I just ask, how often do you expect buildings to be revalued? I'm a member of a charity, and I have to say, a small charity, but the building that we have, I think, is still down in the books as the original value that it cost us.
Well, it depends on the accounting standards, to be honest, because, I mean, I'll then have to comment, but under international financial reporting standards, effectively, you have to do it at fair value. There are under some that you can, there are some overrides that can be applied where you can keep them in your account at cost. Now, SIPFA has not allowed that option for the public sector or for local government. Therefore, you can't keep them in at cost. It may well be for your charity, and as I do not know that is quite in line with the financials that you keep it ineffectively at cost. In this sector, it's fair value. If you have investment properties, they have to be valued every year. For your other assets, I think the standard says frequently enough, effectively, not to make sure that they're materially misstated. Generally, that's about every 5 years is the way that is applied. And if you really want to get technical, then when you do revalue an asset class, you should do all the assets in the same class at the same time, rather than just doing 20% of everything. So roughly every 5 years, unless you think, or as Tommy as 151 officer would say, something's happened in a year that I think has significantly changed the valuations, and then you might trigger a wider valuation or that sort of impairment review as well. So.
Yeah, okay. I think from the point of view of the recommendations that's in the action plan, because of it's now, but they'll roll over to the 21-22 audit.
And we will start looking at them very shortly.
Start this. So you will have the recommendations now formally, and that will go into a register that says, right, this is what's been brought up previously. You're going to put it on a risk management basis, and then we're going to find out how we're going to deal with that in this financial year. Is that, sorry, in this order?
Yeah. So if I can answer.
Yeah, sorry.
Yeah, so obviously these things have been flagged up, and we're, as a council, we're thinking how we're going to address that, looking at ways to mitigate that down with the valuations, and there is conversations going on and ways we can address, because it's high risk, and I'll take Grant's point, it's an area we are looking at the moment. So we're taking steps to address that at the moment.
Okay. Are there any other questions? I think we'll come on to it later on about the actions for this audit year. No other questions at all? Okay. Appendix 3 now that you want to go on to, or is it?
Yes, appendix 3. I mean, probably just to say to members that once it's now been through audit committee, and I know it's in the public domain now, this does become a public document, and it will go on the council's website. Okay. Moving on to the progress report. So in effect, that's drawing a line under 1920. We're now moving on to 2021, and clearly, because of the delay in signing off 1920, we're behind on the overall audit cycle. You'd normally have received an audit plan from us in April or May of this year if we were doing the 2021 cycle. And then, well, we would hopefully finish your audit by now, but I mean, if you look across the sector at the moment, I mean, the end of September now is the official deadline for publishing audited accounts. So we're outside of that cycle. You won't be alone in not having audited accounts by the end of September. We're hoping to get some of our clients across, but the pandemic has still had a significant impact on our ability to deliver those effectively. It's not just Grant Thornton, I think all of the audit firms are in that position. So what you've got here is a progress report. So I'm now looking at, I think it's page 180, and then I'm going to sort of go on to page 183, which is a summary of progress as at this month. As I say, we signed off 1920. Picking up on the point you've heard, as you've got earlier, is in the committee, the draft statement of accounts were published on the 26th of August. So we've got those in front of us now. We are now currently planning, substantially complete our audit by the end of November. So that's our overall plan, our overall timeline. Now planning should be finished and with you and audit plan with you by the end of October. And the idea then is to, well, the things will sort of run parallel. We'll do as part of our planning, but we'll get the audit plan to you by the end of October, and with the idea of looking to complete the audit by the end of November. I suspect maybe that might end up being like mid-December, but we'll look to do as quickly as we can. So we've made a start on planning. I know the team's been out talking and getting information around that. I don't anticipate the significant risks changing. We haven't found anything so far as part of planning that is new this year that would, so therefore, without preempting that the audit plan, it will be management override of controls. We'll have to look at whether I can continue to rebut the revenue and income expenditure, the significant risk that is a given, but then it'll be, as I say, valuation of land and buildings and the valuation of net pension liability, primarily because they are, in simple terms, they are big numbers and they're underpinned by complex assumptions. So they're estimates and they might move. So there's lots of moving parts in them. Therefore, they've become an area of audit focus. For this year as well, I don't think it's a significant risk, but clearly in 2021, you would have got a lot of COVID grants coming in. So that's going to be a focus of our audit work as well. And we will be looking at primarily on that, whether you're a principal or agent, and that's either whether it goes through your books or whether you effectively, the money comes in, you really have no control over it, you just distribute it, and then you have a debtor and creditor at the end. So that's going to be the key focus, and you've accounted for them correctly. So those are sort of the areas that we'll be looking at. I think to draw to your attention on page 183, the big change is going to be around value for money. And that does reflect through into the fee. There's a change, the new audit code came into place on the 1st of April. And that expects us, and I'll go through it a bit more in effective update, to do more work around value for money and give a more detailed report. And that's going to come in something called the auditor's annual report. Because of the pandemic again, going forward, the idea when the code was published is that the annual auditor's report should be issued at the same time as the audit opinion. Because everything's sort of taken a little bit longer under the pandemic, we have a dispensation that for this year it can be delayed. It's got to be produced within 3 months of issuing the audit opinion. So we might not be able to hit them both at the end of November, but I'm hoping that the value for money auditor's annual report will come in shortly after that, but maybe sooner than 3 months. So I'll come into what I'll do is in terms of progress, I'll just walk you through that, but that's a big change in terms of value for money. We've started on, if I go to page 184, we also audit your housing benefits claim and your pool capital receipts claim. We've already kicked off some of the work on housing benefits around discovery samples, and the pool capital receipts claim isn't due yet. I say we continue to have meetings. We currently have Teams meetings with the team. And I know that Paul and Jeanette, as the audit team, have also been liaising with finance. So on 185 deliverables, rejigged, I say audit plan October, audit finance report November, and then we're aiming for the audit standard report, same February there. So we'll see if we can get that done a bit quicker as well. We'll then move on to audit fees. In terms of the proposed fee for 2021, detailed analysis is shown on 187. It is to a certain extent, I'm parking to at 1920. As members will see, it's still a significant increase on the scale fee published by PSAA. It's round about, I think 60% in total, but that's consistent with the sector. And this is really driven by the ongoing quality requirements. I think as members might be aware of the Redmond review and the need for auditor work. It is still subject to PSAA approval, but I can say that this sort of fee increase and the areas are consistent with other councils. We have put in potential additional fee, and that's picking up, I think, what members are saying. Do we anticipate problems? I'm not anticipating them, but we are saying that we still have to pick up some of those issues that came out of 1920. So there's a £2,000 related to the in relation to a local risk, which will hopefully drop off next year, if we don't need it this year as well. And on page 188, in terms of the VFM, I said we had the option to delay the VFM work, or not the option, but we can delay it. But I have to send it back to you and tell you that we're not going to do it by the end of September. So this is the letter that does that. I was going to stop there on progress report, but then in terms of sector updates, I'll have to take questions. I think the key page, I was going to try and walk you quickly through the value for money approach, but if you want me to take questions now and then go to value for money.
Yeah.
I mean, just to focus on the fees.
Yeah.
We've had COVID, but there's additional regulatory demands. Am I right saying? So what I'm trying to disentangle is looking at the 18-19, which is perhaps before these extra regulations came in. How much of an increase is the extra regulations compared to the COVID?
Effectively, if you look at page 187, as you're saying last year, when we look at going back to the annual audit letter, there's nothing for COVID in here. We're not anticipating COVID being an additional fee in here. And I think, my hope would be with this increase in fees, I know we're taking a little bit longer to audit, so these should be, we're conscious of the increase in here. So all of this is now driven by the regulator. The figure on 187 is driven by the increased regulatory scrutiny. So there was elements within that in 1920 already. So that's what the enhanced audit procedures around PPE were. We say raising the bar, and that's because they expect greater challenge from us to delve more deeply into and challenge where management give us some information that we challenge that. And then we have to do some enhanced audit procedures around pensions. When you see the audit plan, as I say, there's additional fee for value for money. You will get a much more comprehensive report that covers the whole of the council, rather than just focusing on a particular area. And then under the ISAs, there's ISA 540 is coming here, which is, we haven't gone into detail here because you'll get in the audit plan around estimates. So again, there's much greater challenge on us around estimates. So it does include PPE, but it'll be depreciation, it'll be provisions, it'll be elements, anywhere where you had to estimate a figure in the accounts. We have to do enhanced documentation under the new auditing standard, and then we have to do greater challenge as well. So effectively, that fee there is as proposed, is driven by the regulatory standards, and it hasn't there's nothing to do with COVID within there.
I mean, you said there was some stuff to pick up from previous years, about 2000.
I suppose, I'm
trying to get. Yeah. Imagine everything. There was no.
So if
issues. What rough? I mean,
I suppose in a way, I would just take £2,000 off of that and say, if the accounts weren't delayed last year, I'd be coming to you saying, I believe the audit fee should be 53,444.
So basically, there's 17,000 increase in 18-19 is purely due to additional
regulatory requirements and quality challenges.
Yeah. Okay. Thank you.
Yeah, thank you. Good questions. Thank you. Can I just ask about pensions, because it's something you say we haven't got control over to a certain extent, because the impact of that is that we end up with in some case, significant increase, which we've not budgeted for, or we've not been able to budget for because we haven't been able to guess what that would be. So therefore, it becomes a bit of a growth bid, if you like, but it has to be paid. Did you see where I'm coming from?
Yeah, I think there's two aspects here in terms of what goes in the accounts. Yes, your overall pension liability, i.e. what the council or what the actuaries then estimate that you're going to have to pay your employees and staff in the future. That's the figure that goes in the accounts. But in terms of what hits your budget, every 3 years is a triennial valuation where the actuary comes in, looks at the pension funds as a whole, then looks at the individual employers, works out assets, liabilities, and then from that then drives the contributions, because that's effectively what hits your budget, is how much as you have to pay as employer. Employees is fixed by regulation. So that happens every 3 years. So effectively, you get, I'm not your 151 officer, but that effectively drives the budget pressures. That's not to say if something significant happens, and I don't think COVID will drive this because the actuaries aren't saying that, is you could ask for a revaluation in between the 3 years to save it. So I think from a budget, the contributions effective now been set from the 1st of April 20 through to 2021, 21, 22, 23. So unless something significant happens, and a major event, I don't know whether the council doubles in size or it halves in size or whatever, those are already aware of what those contributions are going to be, and you can budget for them. So it shouldn't be a great budget variation. There are statutory overrides effectively on the pension movement in the pension liability. that mean it doesn't hit your budget in that way. It might do it. It does in the commercial world where you go hit your profit and loss. So there's a statutory override to make sure you don't get those big fluctuations, so that council tax effectively for people paying council tax isn't volatile like that. Otherwise, you might end up charging ridiculous amounts of money one year and a lot less next year, and people can't budget. So yeah, it is a factor, but hopefully the volatility is not in the budget. So.
Okay. Sorry, it's for me, my benefit, if you like, because if it's every 3 years that they say the reevaluation, so in our budget settings right up to that, we have to put a guessed estimate in there just in case something does fluctuate? How do we mitigate the fact that?
Can I take the question? So one of my tasks is to check when the last valuations are when we're looking at the budgets. I'll do one of my actions on my list is to check with people doing our treasury and making sure we have a budget, what was last year's, and just to check and make sure it's adequate for going forward. So I need to know if there's any, as was been touched on, if there's any significant events that are happening, staff increases or something significant that's going to affect the pension. So it's not an exact science, but it's part of one of the tasks we would look at when we're setting the budgets.
Yeah.
I go to overall timing. If I can take a step back in terms of last round evaluation, effectively what actuaries will do it as at a point in time. So the valuation was as at the 31st of March 2019.
Yeah.
But that actual valuation takes place between sort of end of March 19 and end of December 19, effectively. And as part of that, they'll come up with a valuation and then they will discuss with employers the contributions. And therefore that should then fit in, hopefully, fingers crossed, into your budget setting cycle for 2021. So you're not having to totally guess, but as Connie was saying, is you need to have a look at it and go, well, what do we think the contribution? Because this is where you do have an input as an employer, is discussing to a certain extent, whilst a lot of it is delegated, I think, to the pension fund, the assumptions behind that. So that when the actuary puts their figures together, they make assumptions around salary increases. Then that might be local to you. There'll be more general ones around inflation and elements like that they'll put in, and something called a discount rate that won't be particular. And also the other things they look at clearly are, not clearly, but mortality and elements like that. And that can be very localized depending on where you are. So there are certain assumptions, I suppose, that some of them are within your, like the assumed salary increase, depending on what your council's policy is around paying exposure. So that's when you begin to impact input into that calculation. And then, of course, there is ultimately, actuaries do have conversations with employers about affordability. And that's why if you've got the deficit on the fund and then the period over which you're going to get that deficit back is up for conversation as well. And generally in the public sector, you have the ability maybe to take that in a longer term view than maybe something in the commercial sector. I think we're all waiting actually on the pension regulator's final consolidated guidance as well. So that's not been finalised yet, because that'll give an idea around what their approach to deficit funding is as well in the public sector.
Okay, so what we're saying is we've got an angle on that now. And
Yeah, because obviously, because we outsource we are looking at it.
that's fine. Yeah.
So, different things like that. So we have to.
Then the new issues with regards to value for money, the change in legislation, is that significant that it's made that much difference to your input into it?
Yeah, so if I take maybe to take you to pages 190 through to 192, we sort of summarise there the approach to value for money. And the reason why it has impact on the fee is, whilst in terms of the overall way we look at in terms of the user criteria, but I mean, in terms of what we look at governance, we look at financial sustainability, and we look at economy efficiency, effectiveness. Under the old regime, we would look at that. We would do an overview, a risk assessment, and then say, well, we think there's a focus area there we need to look at. And generally, local government, that tend to be financial sustainability, not unsurprisingly, given the current economic process. The change here is we need to look across the council as a whole. So the idea is it's getting back to, I think it's trying to get back to what the public think we do, as opposed to maybe what we were actually doing in practice, because of what the way the guidance was framed. So we now need to give a commentary across the areas, across the whole council. So I can't just say, like I did last year, saying, well, I've looked at all of your reports and we've talked to officers and we've formed a view, and we therefore think medium-term financial sustainability or plans is a focus area. That may well still be a focus area for us going forward, but I also need to form a view on your governance arrangements and then provide a commentary back on that. I have to make a commentary. I can't just write down what you do. So, you can't give me the classic thing. You can't just give me your watch and I'll tell you the time. I need to look at it and go, actually, do I think it's good, bad, indifferent, whatever? So we have to have a commentary on it around that. So that's going to involve us having more in-depth conversations, probably with more people across the council, whereas before the focus was probably chief executive, finance team. We're now going to have to get a sort of wider into it. So that's why the fee is related to that, because we're going to have to do more work around that. It still will be primarily, we will still look to you to help us in terms of gathering information. But I'm also not allowed to just send out a checklist that goes, can you please tell me the answer to all these questions? We're sort of somewhere in between. So that primarily drives that. The idea is it's meant to be more meaningful and timely. The thing about it is, whilst last year's audit was delayed, if we find a significant weakness, those are terms we'll use now, while we're going along, there's expectation we report immediately. I'm not saying I am there. So if we did find something, though, we should say something then and there, as opposed to wait for the whole process to finish before we say anything. The idea is trying to sort of drive improvement. And the idea is we should be able to reflect better what your local circumstances and elements like that, so that it becomes more of more interest, I think, to the public, and probably adds value. And that all takes an additional time to do that. So, and on page 192, that's where we say about the commentary and recommendations that we have to make as well. And there's a certain way we have to put recommendations in. We have to tell you what the problem is, the impact might be, and why you need to resolve it. So it's sort of taking you on that journey. So that's why it's more detailed, and then you will see a much more detailed report than the one page maybe that you got used to seeing over the last few years.
Yeah, okay. That's, I'm looking at the new approach to value for money.
Yeah.
And good luck with that.
It's not a question, just general. For the value for money, are we forward looking? Are we looking what's happening in the future? We're going back to
it's primarily looking at the arrangements in place during 2021, but there is a forward looking element to that, if you know what I mean. So it would be a bit remiss of me to go back and say, well, I can look back at 2021 now, you've come out of that, you've got your accounts, it remiss of me sort of financial sustainability to say not look forward a little bit. So there's an element of that, but it's primarily still focused around 2020, the arrangements in place.
Yeah, because the only reason I'm saying that is obviously the situation in 2020, not just us as a council, but the general certain things that would happen going forward, maybe something that happened in 2021, generally speaking, throughout the country, when everyone had to move out of offices.
And I think given that we'll be publishing about 3 months, sort of maybe after the opinion, I think we will look to sort of bring it up to speed as well, because I think if we publish around about, January, something like that, we'd need to bring that into context as well. So, okay.
Again, we have to be forward looking, because in the past we've always had a 3-year or 4-year financial plan moving forward. But because we're only being, how can I put it, funding is year on year through a central point of view. So we don't know what's going to happen the second, third, fourth year.
Yeah.
So it's got to be the best estimate moving forward, isn't it?
Yeah. I might only say because circumstances are different. I think there's a 3-year financial settlement that's sort of understood is going to happen. So what I'm saying, it's slightly different to what it would have been 2021 in some aspects. So
Yeah, I mean, we do. I mean, we pick up now. I mean, we have recognised that a lot of councils have effectively been setting sort of like almost like annual budgets because, as Colin was alluding to, you've been only given annual settlements. I think the hope is in October. There might be a bit more of a 3-year settlement.
I've read
I haven't seen it yet, so I don't know. But that's the hope. And but that then, picking up on your point, Chair, should help the council to plan better and knowing roughly what it's going to get over the next 3 years. But that's what everybody's asking for, and it's not just yourselves. I think the sector is saying that the greater clarity you can give us over the short to medium term, then we can begin to plan. Other than that, it is a little bit of sort of hand to mouth, effectively, which isn't helpful really.
No, I was going to say, moving down the line of being more commercial thinking, which is fine, no problem with that. Like any business, you would need Jeffrey's a businessman. We need to be in a position where we can forecast and be able to plan. But if we can only do it for 1 year, we then become reactive rather than being proactive, and that's where the possible risks are associated with what we're trying to achieve. That'd be fair, wouldn't it, to say that? Okay. Are there any? Sorry, David. Yeah.
Thank you, Chair. Just on that, the future estimates of costings and things like that. So we've got that additional work for the new code, value for money, under the NAO code. Yeah. That's a mouthful.
National Audit.
Yeah, that's probably easier. That then becomes a standard charge moving forwards because of the additional work. It's a change in code, so that will continue.
Yeah,
and then only.
Yeah, I mean, unless the NAO changes its guidance, which I mean, the code's normally set for. Well, the code came in. That normally lasts 5 years. So, and there could be tweaks in the guidance. I don't know. We won't see what the National Audit Office says, but yeah, overall, that then gets hardwired in. I mean, I should have said probably in fees. Certainly for this year, the government has made, I think, £15 million available nationally. It's going to share out amongst councils. And that's to pick up the consequences of revenue review and some of the quality. I think the unknown is how much that then gets followed in. So, I mean, I think, we're hopeful that it gets put into that 3-year settlement, but we haven't seen the detail yet.
Yes. Okay. Are there any other questions for Grant on this? Any questions? Do we need to go any further with this? I think we've exhausted quite a lot and put questions out.
Chair, I was just saying that Grant's got another meeting to go.
Yeah, I've got to go to the City Council. So I'm happy to, if you've got any questions on it, it's fine. So,
from my point of view, I always value these and any external, which is independent, technically, isn't it? That gives us the strengths and weaknesses that we've got, and we should welcome that because we want to move forward. We want to be in a position where things are happening to us, and we can move forward and put processes in that will eliminate those, or at least reduce it. That's fantastic because that's where we should be. So I thank you for your input.
We've put a few pages in the back around sector updates, which have links into. They're there for information, not necessarily for comment, if you know what I mean. Yeah. So, but if you have any questions for that, I'm conscious of time, then maybe just either through comment, just drop me an email and we'll pick them up then. But they really just sort of say, well, this is what's going on in the sector, and to keep you, as well as an audit committee and those charged with governance, up to speed on where we are at the moment.
So, just for clarification, as up to this moment, the accounts presented by this council, what's the term you use without?
That unaudited. What do you mean, the 2021 accounts?
Yeah, last year's accounts.
92.
Well, the ones that have been audited up until which
1920.
They're published.
And they, right.
Certified closed, yes.
Certified closed. And I'm trying to remember the term that you used to say that they're okay.
Robust, is it?
Well, we've given an unqualified or unmodified opinion on it. Yes.
So I just wondered, Chair, whether you would care to point out that to our local member of Parliament, who we are having serious difficulties with, because I think the public really ought to know that after the stuff that's been coming out.
Yeah.
And can we leave that with you, Chair?
Okay, leave that with me. Yes, I think.
Thank you.
The publication of the report speaks for itself, and if they care to look at it, or anybody, they will see that yes, the unqualified accounts have been signed off with strengths and weaknesses that's associated with it, but we're managing everything properly and efficiently through Comet and his team with the support of internal, external audit.
Because we had an awful year last year, and not only was it with COVID, but the turnover of senior staff that we had in the finance prior to your arrival, people coming in for a few weeks and then disappearing to other local authorities. And, so it wasn't, despite all of that.
Yeah, and that's why we did reflect upon that. And I think it might be yourself, Councillor, who challenged us last week. Are you sure you consider that? So we did consider that, and we just felt on balance, the way you navigated through that, felt that it wasn't something that I needed to make a recommendation on, so to speak. And clearly what we will do as part of this year's work is see how that has progressed, if you know what I mean, and see if things have clearly the council published now, but overall how things have improved, and that'll then feed into this year's value for money assessment.
Yeah, so it's a fair point. We're okay.
No, it's all right. I just wanted to hear it from the horse's mouth, if I may.
We're looking at those issues that you saw. Comet's taken on board, and I think personally the residents of this borough can be satisfied or confident that we're doing a reasonable job. I think that's fair to say. Yeah. Thank you very much indeed. Yeah. So if there are any questions for Grant, please, if not, then... Yeah.
Thank you, Chair. If you don't mind, I'll just try and dash up across the city as possible. That's possible this time. I don't know, but I'll see what I can do.
Might make it probably this time of the afternoon.
Yeah, that's what I'm hoping. Yeah.
Don't go via any petrol stations.
Unfortunately, I found one last night. So.
Yeah. Everybody's finding them at night. I'm going to have to try that tonight.
I had another audit committee last night.
Okay. Grant, thank you very much indeed.
Thank you.
And, thank you for yours.
We'll see you in October. November.
Look forward to that. Thank you very much indeed. Okay. So, there's a comment bit now, don't we? Agenda point of view, it's the internal audit. Mate, can we introduce this?
Chair, just before you go on, are you noting the report by general affirmation?
Oh, beg your pardon, yes. Thank you for reminding me. Yes, we note the report by general affirmation. Thank you very much for reminding me that. Thank you. Over to you, Colin. Just go to the page numbers or whatever.
Yeah,
where we are.
so in the internal audit, I'll introduce it. So with this, it's to give an update on what the internal audit progress is. And that's the recommendation. And what at this point, if you turn to the page, Appendix 1 is the report that I'm now going to hand over to Mark. Mark, who will talk to us about. That's okay.
Very much. Okay, so this is progress report taking us up to the end of August 21. So it's the first progress report 21-22 audit plan that was agreed, I think, back in March for covering for this year. Section 2 just provides a summary of reviews that we've completed since April 21. The first one that I've noted there, as you'll know, we do have an element of time in the plan every year, which is specifically IT audit related. We buy in an IT audit expert to deliver that work. This year, obviously, one of the key IT related risks is the fact that there is this major projects being undertaken to bring the ICT support services back in-house. So we met with Philippa on this, and there were really two options. We could either wait for that project to be delivered and then review how the project went, or we could provide expert audit advice, IT audit advice, as the project progresses. And I think of those two, clearly the latter is much more useful and beneficial to the authority. So our IT auditor has linked in with Philippa and your new head of IT. And although it's under reviews completed since April 2021, it is an ongoing piece of work, but I just felt that it was appropriate to provide you an update of what we've done so far, because it's a pretty important piece of work. So that's just a summary of the support and advice and the recommendations that we're providing on an ongoing basis. So it's not in the form of a formal audit report, because it's very much on the basis of meetings, reviewing of documents as they are produced, and then making recommendations about what else is needed. And part of that ongoing piece of work will be to ensure that those pieces of advice are taken on board. So hopefully it's more of a consultancy piece of work than it is an audit piece of work. So it's not something that will provide you with a formal audit opinion, but it is a good way of actually trying to affect a project whilst it's in operation, rather than coming along and criticising it after.
Take questions at the end, or do you want as we go along?
As we go, I think, Kevin, that would be
Sure.
That would be fine. Yeah.
Well, from my point of view, the IT is very important with the transition. Except that what you've just said, but we need because there's a process in place, we need then to monitor that process and have reports back to see if that process is meeting its targets, if you like.
Right. Yeah.
Because there is a deadline, isn't there, or there's a target of January. We need to be in a position to find out whether that process is working. It becomes green, amber or red, so that we can look at whether or not there's
I would imagine
place that will mitigate any problems.
Yeah, I would imagine that the best way to ensure that takes place is through the risk register. This should be identified as a key risk on the corporate risk register, and that's the way that you can provide, you as a committee, you can obtain assurance.
Can that be then included in the corporate risk register?
Yeah, I think it's
Might be.
I
think it would likely be there. Yeah.
But on the risk register, what it does, if the risk is greater, it sets up like medium high. As the risks increase, I will reread the risk register to see what it says about IT. But Chair, I can recirculate the risk register so you can see it.
That would be helpful, yeah.
Yeah.
Thank you. Sorry.
Okay.
Any other questions first before we move on? No? Okay, thank you.
Okay, so community safety is finalised report, as is the volunteer programme. Now, both of these we've given a moderate level of assurance. And I think what I want to say about that is that both of these systems and processes have been impacted by COVID-19. We can't get away from that they had a significant impact on the delivery of the volunteer programme and of the community safety partnership. So as a committee, obviously if you see moderate, you won't be happy about that. You want to see things that are either significant assurance or full assurance. But there has to be a recognition that you may see a few moderates or even limiteds because of the situation we've been through over the last 18 months. I think the important thing is to focus on what's being recovery action is in place rather than what's happened, because up and down the country this will be the same. We can't have something as big as COVID-19 and not expect it to have impacted on what we're trying to achieve. So with regard to...
Can I just make the question on term moderate? I accept what you're saying, but if you put moderate down, it's got to be clearly explained in the report why it's, I mean,
Right,
your explanation just now was very clear and understandable, but in the final, whatever you do, it's got to be clearly.
Yeah, it's highlighted in the executive summary, and what you get here as a committee is a sort of a cut down version of the executive summary. So those bullet points identify key things that we need to catch up on. So with regard to community safety, there was an issue, and I'm sure you'll know this as chair of the CSP. There was an underspend last year. There were things on the delivery plan that just couldn't be delivered. As I understand from my doing this audit with Mark, there was some uncertainty about what would happen to those unspent funds, whether they would be retained and then delivered in 21-22. I understand that has now been resolved. There were also some delays brought about by the fact that there was a new police and crime commissioner, and the sort of stop was taken to ensure that the priorities and the funding would be as it was previously. I believe there are some changes to that. That's taken a while to work through. So there is a bit of catch up to do on the work of the Community Safety Partnership. There has been partners have not that they haven't been delivering anything, but they've perhaps been delivering it not as a partnership in the interim period, and we need to take account of what's been done. I think the 21-22 delivery plan is now imminent. I think
will be the next meeting.
Yes, which is
finalised.
Yeah. So then there's just going to be some catching up on that, and as long as that happens, then you get that assurance through your role there, Chair. So, but yes. Unavoidably, it's moderate at the moment, but that's not due to any serious failing in terms of the system and process that's in place. It's the situation that the pandemic has caused. Similar with the volunteer programme, if I move on to that. So just prior to the pandemic, the council agreed a new volunteering policy and was all set to really expand the activities that volunteers were helping with. That was seen as a very desirable thing to involve the community, very laudable. That policy really just hit the buffers because it had to be completely changed, and the community hub was introduced in its place to support individuals that were shielding. And so the volunteering policy really didn't get off the ground. So it needs to be reset, looked at again. It's a chance to review what kind of things the council wants to do. There were some inconsistencies of what was in the original policy that never really got off the ground, and some of the things that were being planned post-pandemic. So I've discussed this with Dave Gill. And I think the key thing coming out of this audit is just to reset the policy and move forward on that. Again, we should see some, with the proviso that we don't go back this winter into, the similar situation we had last winter. It doesn't look like that, but I think we've kind of given up thinking that we know what's going to happen. So
rumours.
Yeah. So
sorry. Can I bring it in, please?
So just, not really. I'd like to point out for the record, really, that the irony here is this is looking at normal time volunteer programme. And yet the council, I think, has done an incredible job with
Great job.
which is still ongoing.
Yeah,
I believe so. The amount of help that's been provided
yeah.
during, and I think hopefully that's provided a huge amount of experience for the council in organising and managing that. So
There were some things around that where stuff in the policy was set aside, so there weren't any signed agreements between the volunteers or confidentiality agreements of that nature. And I've had to take a pragmatic view as your internal auditor, knowing what the situation was and how urgent the situation was, controls that you would normally expect to be in place, especially when you're dealing with potentially vulnerable people in the community. We had to take that pragmatic approach, but now we're not in that situation. So it is an opportunity to review what happened and decide, and that might inform the volunteering policy that as it's going forward. To do we need these things in place? What type of volunteering programs do we need? A bit more rigour around if we're dealing with potentially vulnerable people. I think there's some good learning that come out of what we had to do during lockdown.
Yeah, there's some good work on there. Thank you.
Banged on about recommendation tracking a lot in my presentation earlier. So here it is. Here's the summary of where we're at. We have obviously we've been your internal audit function for a number of years now. Taken the opportunity to just look at recommendations over the last 3 years from the 1st of April 2019. I think if you leave old recommendations from 5 or 6, 7 years ago that were implemented a long time ago, it starts to lose its impact. So if it was, 10 out of 700 or 800 recommendations, you'd think, wow, that's really, really good. There are only 10 outstanding, but of hundreds and hundreds of those recommendations related to, the 12, 13, the 13, 14, 14, 15 year, a long, long time ago. So we've kind of reset that. So now we're sort of measuring that 10 against 148 in total that were due to be implemented. And the recommendation tracker is telling us there are 10 that remain to be implemented that should have been implemented by the end of August. If you want me to provide my auditor's view on that, I will. And
yes, I do.
what I've been through, I think is very, very good indeed. Expected more recommendations to have slipped during the programme that we've had to adopt, and the extra work that officers haven't been doing related to COVID in particular. So I think the fact that we've only got 10 that have gone beyond their implementation date is good news.
Can I just ask, of this 10, I'm not sure how it adds up. On the chart at the bottom chart, I can see 4 less than 3 months. But I can see 3 to 6.
I think there's a typo there. Yeah.
And
that total column's not quite right. Sorry, I do apologise for that.
and the greater than 6 months, you talked to 3, but
totals.
No, the total columns haven't dealt with that. So annoying on my part that I've missed that. Apologies.
Sorry.
The comment coming now.
Can I just make it's all it's really good what you just said about the controls are good. Would it be possible, with the chair's permission, in future reports, if you could say, yeah, this is very good on the reports, because now as part of our audit requirements, it's for value for money. It's good to be seen that we're performing really highly, because it will be one of the measurements of one of the tests. So where things are like that were excellent, you know, where we've had,
Yeah.
it would really help.
Yes.
From the external audit point of view. That's all I can say within this meeting. But it would,
I think that's a good comment, actually, because these would become public documents, won't they?
it's a public document, and
What does it mean?
when the external auditors look in the general public, they'll look, if it's something's excellent, we need to say it, you know, make it stand out.
Yeah. Yeah, no, that's a fair comment.
Especially now that we've been audited for value for money, this is the sort of thing they'll look back at your internal controls. So excellent what you've done, but if you just make it look as good, enhance it, just say yes.
Yeah, provide a viewpoint on that. Yeah.
It's a good point. Ian and then David, please.
Thank you, Chair. Yeah, I'd just like to, again, for the record, just say on behalf of, well, I don't know, the committee members, but thank you to officers for performing this well to meet these auditing standards during these trying times. I think from what our internal auditors are saying, they've done an incredible job.
Yeah. A lot of those sort of recommendations naturally do end up in the finance arena, as you'd expect. Quite a lot of our work looking at sort of finance and income systems. I think what's happened recently, which is good, is that COMI's now getting some support and you're getting some individual people in, which, you know, hasn't always been the case. It's been quite difficult, but I think we've certainly seen an improvement as COMI gets more people in the team around him. Some of the key roles, Reps and Ben's manager, for example, because I know there wasn't came and then went fairly quickly, but now, you know, you've got someone in place that will take some of that load off of COMI's shoulders, and that in turn will help us, I think. So that's good.
Yeah, David, you want to join that?
Yes, thank you. It was just to reiterate Commie's point there, that I think having a statement like that on the report would actually be really powerful for anybody reading this. That depending on the mindset of that person, they could see, well, there's still 10 outstanding, or it could be, well, there's 10 out of 300 or just over 300 ones that could have been implemented. So that's depending on the mindset of the person reading it would be.
No, I think that's fair comment.
With the ones that you said about you've taken the stance of anything over, was it 5 years?
We're going back 3 years.
3 years, sorry.
Yeah. Now,
is that going to be a rolling 3 years? Is that going to?
Yes, I think so. Yeah.
So with that, when they come to that 3 year period, is there going to be a sense check of significance as well? So is it just anything over that 3 years is going to be taken off?
I think we'll take the only ones that will remain on, I think, are if they are still outstanding after that period of time. That really shouldn't be the case. I think there will be alarm bells ringing if there's anything that we raised sort of 3 years ago, which is still outstanding. So we should be safe.
So it's only complete.
Remove them all, but I will, as part of that process, double check that there aren't any that means that there's something that hasn't been done when it should have been, and that's clearly not the case. So,
So we can rest assured that none of them have disappeared.
That's true. Yeah,
are outstanding. You would have told us about it.
Yep.
Oh, you want to carry on?
Okay.
Thank you.
Yeah. So I do identify, and this is based on what the committee previously asked for, any high or medium risks that are overdue for more than 6 months. So there are no high ones that are overdue. There are 3 medium risks that are overdue from their original implementation date, and I identify what those are there. Sometimes there are, the reasons why they haven't been implemented are clearly understandable. So if you look at the 2 with regard to the comments we made on IT application security, you would expect that to now be wrapped up with what's going on with the transfer work, and it wouldn't have made sense to have done something involving the ICT partnership, which was then going to no longer be in place. So I'm satisfied that there are reasonable reasons why those are still outstanding. The housing rents one.
I don't understand that, I have to say.
Yeah.
It's a bit confusing, the
Housing rents.
why it's outstanding.
I think it's just workload issues. The key area has always been repairs and maintenance. There was and there is a service improvement program in place, quite an extensive one around housing repairs and maintenance. And again, the head of housing is a fairly new person in post, and he is focusing on that first. There's a lot to do, and so he's just honest really, and said that reviewing the housing rents policy knows it needs doing, but the focus is in housing repairs and maintenance.
Okay, can I ask Ian first and then comment, please? Ian?
Just to comment that, as a ward councillor, I'm aware that things are definitely moving with housing repairs. Chartwell House in St Peter's Ward has had its boiler, or is having its boiler done now, and that has a huge job. 5 days of no heating for those tenants, but it's something that's needs doing, and it's good to see these things moving. So I can understand you prioritise that before addressing what the issue is in the recommendation. Is that correct? They're getting that initial thing done.
We have got a piece of work, as you'll see from the section 4, which is a summary of everything that we're doing this year. We've got a piece of work that is currently ongoing, looking at housing repairs and maintenance, because that's so important, and it is an area that I think hasn't received the funding that it needed over the years. So it is a key focus now, and we are doing a piece of work looking at delivering that service improvement program. It's nice to get an independent assessment.
Resident feedback.
That things are moving in that area.
Come on, you want to come in?
Yeah. Obviously, hopefully in the next couple of weeks, I should be getting some more staff. One of the areas I want to look at is the housing rents. So it's an area that I'm going to work with the housing services to just see what we can do, because I know we've had some improvements on the housing repairs side, but the housing rents, I want to look at a bit more depth. So it's an area that I need to work with the housing team. I just wanted to flag that to the audit committee, that I just want us to be as effective and efficient as possible.
Maybe then step in.
Sorry. This is more for Connie actually. Is with that, what's the time frame that we are looking at that, just purely from a basis that if we are focusing, and rightly so, on repairs and maintenance rather than rent collection, does that change the significance of them becoming bad debt? And what write-off? So what's the time frame that we should be looking at that?
So the answer to that, I'm arranging a meeting with the people concerned in housing to discuss what you're sort of saying, what you've sort of highlighted from other points. So I'm away next week from on leave, but hopefully about within a couple of weeks of after, I'm going to arrange a meeting with the service and then sort of get some sort of timescales can sort of achieve things. So perhaps, where are we? The next audit committee, when is that? That's or even before that. Even before that, if I meet with the chair, I can sort of have a better answer Because I've seen some of the arrears figures and I want to improve them, but I need to see how we're doing it at the moment. Is there room? Is there ways we can do it? Best practice. Housing's one of the areas where I had quite a few years' experience. I just need to get behind what's actually happening. Just to
Do you think that will the increase? Sorry, the arrears will increase with the new initiative by the government of dropping this £20 off everybody's universal credit, or?
It's hard to assess. So, okay, I'll give you an example. With people in council homes, a lot of them are on benefits of some sort. I don't know what the percentage is here, but what tends to happen, it tends to be a good, say, 80% plus. Might not be on full benefits, but on some sort of benefits. So I have to see what the implications are within the housing area, and that tends, and I presume it'd be mainly the ones who family accommodation, say 3-4 bedroom houses, maybe, and probably. So I don't know what the impact is at the moment, but that is sort of one of the questions. One of the areas I will have to take into consideration. But I'm not an expert in that field. About the impact of the government's £20. I know about
just to highlight.
I need to talk to the officers. Do they feel it's going to have an impact? Just to get their point of view.
Yeah, I think it was to highlight that, but it's also then to highlight future down the line. If these people were to become into difficulty, we need to preempt a support package for them as a council, because we don't want them to become, way, shape or form.
No, so
problems.
No, which is true. So obviously we're providing action. If they're paying towards their accommodation, or even they're getting their rent paid via different benefits. So I have to talk to the officer to see what the impact is, because normally, I'll give you an example. Say I can't remember what our rent. So say our rent was £80, their benefits or what the amount of rent we possibly could be paid might be a little bit higher, say £80. So they may be to get up to £80 in benefits to pay towards their rent. And at the moment they're paying 70, or it might be the other way around. I don't know. So I just got to do a bit more of a conversation with the service to see how.
Following on from that, you're then going to have a meeting with the experts, if you like, with Mark with regards to that.
So Mark, in conjunction, because I have regular conversations.
Yes, of course you do.
Yeah.
I need to speak to the experts.
Okay,
so
that's fair.
Get a viewpoint.
Yeah.
Jeffrey?
Well, it was a point I was going to make. I don't want to be seem extreme right wing or take the away from them, but I would agree with what you're doing. We must know, because I think this ban on making people homeless, I think, ceases.
It was a temporary arrangement.
Yeah.
You couldn't get people.
But we don't want people homeless, and when we've got to find out ways. Well, on the other hand, we've got to get the renting, because we're.
Yeah, that's right. I mean, if people are already in accommodation, you wouldn't want to be pushing them out of the accommodation. As a council, we want to be as supportive as possible, because we're their landlords, a social landlord, so we have certain responsibilities, but also we have responsibility to collect rents and see what the arrears are. So, for example, with the rent arrears, sort of things I would be looking at is, how old are some of these arrears? Are they years old that they're uncollectible? Are there people who've left and gone and moved somewhere else? In those cases, you have to write those off if they're uncollectible. But if it's the fact that someone may be not paying their rent, might be getting full benefits, it's not unknown for people to be, I'll give you an example, driving a flash car or something, but not paying their rent. I don't know what the circumstances are, but they're the sort of things that need to be addressed. Or is the council coming to arrangement with that person to pay the rent Maybe if they can't pay the full amount, can they pay a certain amount of it over a period of time? So they're the sort of questions I need to answer.
That'll come out in your meeting.
Yeah, they're the same questions, yeah.
Okay, thank you. Thanks, Mark.
Okay, yeah, just very briefly then to finish off. So section 4 identifies all the work that we're doing for the 21-22 plan. I think it's just worth updating a couple of things, because obviously this is at a point in time that I produced this report for it to get out to be with members as part of the papers going out. So the emergency planning work is now or has now been reported. That's at final report stage. I'm just waiting for Dave to come back to me to confirm that he's happy with the responses that the senior resilience officer who provides the service to Oby and Wigston through a partnership. He works for Leicester County. So once Dave's okayed those, that will be sort of a full final report. We also have had to do some work that we weren't initially expecting to do on business restart grants. That's sort of 4 or 5 lines up from the bottom. We have to provide a certification that I sign and then Anne will sign that goes back to BEIS. That work is now complete, and the certification, I've done my element. I don't know whether Anne has signed off and it's been sent off yet. But it took the work.
That conversation.
Yeah. There was a deadline for that for the end of this month, so we've achieved that. Hopefully, that's good.
Hope so.
Yeah.
Will be.
We've got David.
Okay. Can I just ask on that internal audit plan? At the bottom, we talk about taxi licensing and selective licensing.
Yeah.
I'll have a word with the chair of licensing, because we did introduce scrap metal merchants licensing some years ago.
I didn't hear you, I'm sorry.
Sorry, we introduced the scrap metal merchants license some years ago, but we've never had a report back to say how many.
Selective license is not that.
No, that's by saying Wigston one.
South Wigston, yeah.
That's South Wigston. I'm just talking about, I've just referred to taxi license and selective licenses, but there's also scrap metal merchant license as well, which we've never had a report back as to, since we've introduced it. Any reports or challenges to see whether. The reason I'm saying
licensing, different elements of licensing most years as part of the strategic plans. We can't, we haven't got the resources to look at it every year.
No.
And neither would you want to, because it's not like as key risks as some of the other areas. But over the course of the audit plan, we would be wanting to look at all the various different licenses, so we can make sure that that's picked up maybe next year.
Discovered, did we not, that for a number of years nobody bothered to collect hairdresser license money, and it hadn't been included, and we didn't even know. Well, I didn't know as a member that you had to have a license, and so we appear to have ignored that. So, taking the chairman's point, should we at some stage review licensing in general to make sure that all the licenses that we have a statutory duty to issue are issued?
We do that over a course of a 3-year plan. So yes, I mean, this year obviously the selective licensing is a key one. It's new. And so that's why it's in this year's plan, and other licensing we may have to look at in subsequent years. Taxi licensing, we found issues there in the past. So again, that's why that's been brought forward and it's been done this year, but then we can focus on other licensing.
Because the reason I ask is obviously during the course of this lockdown and everything else, people who have been out are people collecting various things that people leave out. You know, we're our own worst enemy, aren't we, when we do that? But equally, then people are saying to me, why are they out? Why are they allowed to do what they're doing? And we can't do this. I said, well, you know, I can't stop people from driving the truck around, and we can't. And it's about the people who leave this stuff out in the first place, because they're leaving it out in the hope that somebody's going to come pick it up. But then it dawned on me that we did introduce a metal merchants license scheme, so that those people, wherever they're licensed, say they're licensed here, they can only collect here.
Yeah.
The license in Blaby, they can only collect in Blaby, but we don't know how that process is working, if at all.
Yeah, I'll have to. I'll have to look at the.
I'm not looking for an answer now. I'm just suggesting, could it be something that within our remit to be able to, as we've got the other licenses here, coming back to hairdressers or see whether or not.
Yeah, it's certainly something that
It is an income as well, isn't it?
consider as part of when, you know, not when the audit plan comes to you in March. Does it cover all of the things you want it to cover? Internal audit is a finite resource, obviously. It's not a bottomless pit. So management make decisions on what will need to be covered and what may be less of a priority, but so does the audit committee. When that report when the proposed plan comes to you, you have that opportunity then to say, well, you know, what else could we ask them to look at? Is that more or less important than what's already in the plan? And sadly, there is sometimes a bit of a trade-off on that.
Yes.
Yeah.
We need to be.
That's where you could ask for assurance in a different format. If it's decided that internal audit doesn't have the time and the resources to look at a certain area, and there are valid reasons why, and it's generally because there are more risky areas that you want us to focus on. There's nothing stopping the committee asking for just a specific report on scrap metal licensing, and I guess Dave Gill would bring a report to the audit committee if that's something that you.
Either.
We have a licensing
Yes.
committee which ought to be looking at the issues of all licensing.
Yeah.
It's the principle of what we have to license and whether we're actually what we license, what's coming in as well.
So on the fees and charges, we do need to look at making sure our fees are competitive. So it's all going to be part of it. Because I'm just thinking back to the licensing list that I looked, and I know, for instance, mobile hairdressers are on there, and there's quite a few. The scrap, I've got to admit, the scrap metal licenses, I can't remember because there's a long list, so I have to look at it again. But when we're reviewing the fees and charges, what we do charge, okay, let's take tax dues. One of the things we have to look at, are we charging the right amounts? Can we increase that? Because I think we're cheaper than most other places. And so I have to, it's one of the areas we need to look at. I take your point. I mean, with the scrap metal, because obviously what Mark's saying is we have to sort of put a value. Some things are going to all the committee. If something's only, there's one of the odd one or two people got scrap metal license, then you probably wouldn't bring it to it. But outside of this, you probably could ask me the question, can we check to see if we've got something in place? But it's the high value things, the things that are going to impact the council.
Yeah,
probably more brought to here. But obviously, as the chair, it's
I can understand you want to prioritise high risk, low risk, medium, all that. I appreciate that. And perhaps, as you say, from a point of view of it may not want to come here, but it may want to go to the licensing.
Yeah, could.
Overall,
we may want to decide that we want to take over Wolverhampton's job. I think it's Wolverhampton. That seems to license taxes all over England and get the money for it.
I can't comment because we're in a public meeting.
Okay. Anything else, Emma?
Not from me.
Any other questions that you want to ask Mark? Because thank you very much indeed. That's really helpful. And we look forward to the next meeting, which will be December. Can't remember the date.
25th.
25th. Thank you very much. It's not on here to remind me.
You might become.
We need to.
There'll be no turkey, so yeah.
Yeah.
Chair, just
Right, mate, we've got, sorry,
noting the report by Chairman.
I'm into it now.
Very good, Chair.
Learnt my lesson of last time. Thank you very much. The recommendation on page 205 is that the progress made in delivering the 2021 or 22 audit plan be noted. So we can safely say thank you very much, and we've noted that.
Can I just,
Any other?
just one other thing, Chair? I just want to double check. With the previous report, the external auditor, there was an action on that one. That's all approved.
Yeah.
Agreed. Okay.
Yeah, we've done that. Anything else? Are we all right now? We can close the meeting. Thank you very much for everybody attending, and thank you very much, Mark, for your input.
No problem.
And Connie for yours, and of course,